Morning, Steve Freed in Chicago with the morning grain comments. Hope everybody had a good weekend. Certainly we had our share of snow in Chicago over the weekend. This week looks to be warming up with some rains midweek, and then the following week looks colder again across much of the Midwest. This is a pretty normal type weather pattern for much of the U.S. Overnight, prices are lower. Soybeans broke down below the 850 area in the January. Part of that is due to the fact that Argentina elect Marcy as their president. He's supposed to be pro-business. We'll see if they devaluate their currency as much as some people rumored, and see if that increases farmer selling and pushes product, especially meal, onto the marketplace. Soybean meal prices continue to drop, not only because of that, but also we're seeing lower crush margins in China and concern about maybe a drop in DDG exports to China, which could lower domestic meal demand. Corn about unchanged. We're trying to hold above that 350, 360 area. U.S. is competitive in the export market, but we're not seeing a lot of new export demand pop up. Farmer selling has slowed down, which is helping the domestic basis, and the funds are now short about 85,000 contracts, which is more than expected, and that might offer some support to the corn market. Over in the wheat, we still have too much wheat in the world. There was some reports that India crop might be down and Ukraine crop might be down, and that might offer some support to the wheat market. But it continues to work lower along with the rest of the commodity prices on concern about global economy and weaker prices, especially on the energy side of things. Ocean freight, U.S. barge freight, all dropping to historically low levels because of the lack of export demand. Over in soybean oil, we'll be watching that kind of closely. There is some legislation being thought about in Congress about giving a producer credit for biofuel demand that would increase domestic soybean oil demand. Cattle on feed report on Friday showed 102% versus a year ago. Placements are at 96%. And South American weather looks mostly favorable. Maybe a little bit too much rain in southern Brazil, maybe not enough rain in parts of northwestern Brazil, but all in all, conditions still remain mostly favorable. As I mentioned, funds are short 50,000 beans, 85,000 corn, and 40,000 wheat. This time of year, there's tendency for a bounce in prices, but we just don't see the global power or the emphasis to push prices higher at this time. As always, these are my thoughts and not those of ADM or ADM Investor Services, and have a safe and profitable trading day.